You're listening to the New Jersey Real Estate Investor Podcast. We talk about all topics related to being a real estate investor in the Garden State, based on our experiences with buying, selling, managing, and building rentals. So together, we can all be better investors. Now, here is your host, Pete Tverdov.
Okay, everyone, welcome back to the New Jersey Real Estate Investor. I am your host, Pete Tverdov, and today I have yet another guest on the show, Sam Cherilus. Sam, very happy to have you here. Welcome.
Thank you. Appreciate you inviting me, man.
Yeah, so for those of you guys who don't know, Sam's a pretty humble guy who's a very successful investor in the Irvington market, which we're going to talk about because I know nothing about it, and you've seemed to have done very well for yourself. And just for the record, what town are you from?
Irvington.
You're from Irvington?
I'm from Irvington.
Okay, so me and Sam played high school football together at Union, and I'm not quite sure how that worked, but and then I think when you were there, we beat Irvington.
Yes, we did.
No, maybe twice. I forget. And it's been a bone I've had to pick with Sam. Every time I see him, I have to remind him that he should be representing Union. But that's okay. We're going to let it slide for the show. I'm gonna have to.
You along with everybody else.
Yeah, I bet. So anyway, I thought it'd be good to talk kind of about your journey a little bit because you own, quite a pretty sizable portfolio. I think is it over 30 doors, something like that?
About
right?
33.
33 doors, yeah, which is awesome. And you've seen an enormous amount of appreciation in Irvington. So I thought we could kind of start off just talking about how you got started because I didn't even talk to you about this previous to the show, but I remember because when Sam and I graduated, I think you're 1 year ahead of me, but from college, the housing market, not the housing market, the unemployment was horrible.
Yes.
Right. And I remember I had a job working at an investment bank and I was working at a commodity trading firm. And I think you had your series 60,
6 or 63.
I forget the numbers, but I remember you having your series, whatever, and you reaching out to me on Facebook Messenger or whatever.
Yep.
And you're like, can you help me? And I felt horrible. I'm like, no, and I remember thinking, man, I feel for this guy. I played with this guy. This guy graduated. He's not a stupid guy. Because that's hard to get those. And
can't do nothing with it.
Couldn't do anything with it. Yeah. And then a couple years later, you started bubbling out of the street, acquiring property. So I would love to kind of hear your story and how that happened.
So it's funny. When I had the Series 63 and my insurance license, I was working with Primerica part-time.
Okay.
But when I got out of college, that was I think the summer going into the September is when, the crash happened. So I went from working at a gym to getting a placement with a staffing company, with a plastic manufacturing firm doing initially administrative assistant work, then collections or reconciliation. And I remember picking up a pamphlet and it was a real estate guy, Ron LeGrand from Jacksonville. He had a whole bunch of...
That name rings a bell for some reason.
Old guy. He was doing assignments without contracts, buying property, selling property, wholesaling, all of that. That's when I was first introduced to it. And I picked up the pamphlet and I think I paid $1 subscription. Was seeing all this stuff on YouTube, was picking up all this information.
Interesting.
And for about a year, I just started going to seminars and learning about tax lien. And I just was stagnant. Knew all the information in my brain, but was scared to apply it.
And how old were you when this was happening?
I would say I've been doing this for I think late 20s.
Okay. So after college, you were working for a while, just kind of
Yeah, I worked for the first 2 years. When I was working, that's when I found that's when I started stumbling on the information. It might have been maybe 26, 27. And then after that, I decided to quit simply because I was going on vacation. I was being, questioned about, taking vacation and all that other stuff. And I just remember saying.
So you quit your job without a plan?
Yeah.
Wow.
Yeah, I quit my job. I just was tired. I mean, early on, even, with us playing sports, I kind of developed the mindset that I couldn't work for anyone. And then actually being in the workforce, I realized I really couldn't work for anyone.
I feel you, dude.
And I just couldn't stomach somebody telling me when I can take vacation. I remember telling the supervisor, like, you can't tell me when I can take vacation. So I was like, all right, I'll let you know. I'll give my resignation, and I was out. Then after that, I went to try selling stocks like a stockbroker.
Yeah.
And all that cutthroat, like Wolf of Wall Street. And I'm like, some of these guys are broke. This is just as bad. And the language and the way they operate wasn't for me. Then I stumbled on to mortgages, got my license doing mortgages, but I still had the same information that I retained, but I was scared to apply it. You know, jump out there. Yeah, you can buy a property without your own money and stuff like that. I could tell you and tell other people the information, but I couldn't really do it. And then eventually I went to another seminar, and then I stumbled across Fortune Builders, went to a 3-day. And then at that point, I was getting the bug, like, to jump forward. Like, if something was pulling and tugging. And then here comes John walking in as a guest speaker. And
John Steingraber.
Yeah. And he had spoke for like a few minutes, but before he got called up, we reconnected in the back of the room, and the speaker kept talking about a successful real estate investor from Jersey in your own backyard, millionaire, blah, blah, blah. And then when I saw it was him, I just had all the confidence in the world. I didn't know that he had NJRESN at the time, but I realized I went to school with him, the same age group.
If he could do it, I could do it.
Exactly. So I just jumped on board. And from that point on, like, once I started seeing some of the information I was learning, I had a whole complete mindset shift. So I started like tapping out mentally at my job with the mortgages. Everything was about, you know, going to the meetup groups, finding deals. And then eventually I left and I started off partnering with my other partner who joined Fortune Builders. And we was like, why don't we just team up together? And he left like a few months early. I kind of got myself fired, I should say.
Okay.
Because I was checked out, you know. But basically, he left like his employment a few months prior. He was realizing how hard it was to do on his own. So he was like, why don't we team up? So we partnered up for the first few years. And then after the first year of deal marketing and stuff like that, wholesaling, I remember getting a letter back 1 year later. $16,000 wholesale. And from that point on, went off doing like 12 wholesales in 1 year, making 6 figures in 1 year. And
Holy smokes.
And then we just took off from there.
Interesting. So you first started wholesaling.
Yep.
And you got 12 deals in a year, dude. That means you were grinding.
Yeah.
So for those of you who don't know, like wholesaling, basically you go direct to seller. That's usually somebody who's distressed. It's a short sale, divorce, fire, like
foreclosure.
Yep. And sometimes like they don't want to put it on the MLS. They might not even know about it. They need cash now.
Right.
15 days, 30 days. So for you to close 12 in a year, you weren't talking to 12 people. You probably were talking to thousands of people. Now, were all these deals in Irvington, or this was?
No, this was all over. But the funny is, the first one was in Irvington. Literally a house I grew up hanging out in, and it's funny when you start getting involved in certain things that you probably weren't doing prior, you start opening up your eyes and realizing like, so some of the same properties that just look like nothing just look like opportunities now all of a sudden. Yep. So you just walk past them every single day, don't think about them. And then when you join a program, you start thinking different. So it was a property, and this is a tidbit for people that are wholesaling. It was a property that was sent to me as a wholesale deal.
Oh, shit. Right? So you wholesale the wholesaler?
I didn't wholesale the wholesale deal.
That happens, by the way.
I knew the deal was, the numbers were wrong. But because this was my market, I just sent mailers eventually because I felt like the deal was going to die. Sent mailers, and eventually a year later, I guess the guy kept my letter. And when he was able to call me, I was able to tell him exactly why his deal didn't close the first time.
Yep.
And because I already knew about it, knew what was wrong, knew about the property, I was able to give him confidence that we can, close the deal.
So there's one thing I hate about wholesaling is like the barrier to entry is so low, like anybody could do it. So like, I don't even know how these people get my number, And I've never ever bought a deal from a wholesaler ever, but like they'll send me, 123 Main Street, the X is the price, Y is the rehab, Z is the after repair value. I'm like, this is completely wrong. What are you talking about? Yeah. But they don't care. Like they're trying to flip the paper. Pete Tverdov here.
If you are a high-paid professional making more than $300,000 a year and you are looking to build wealth and to diversify your investing portfolio, me and my team at Tverdov Housing can help you build a real estate portfolio and earn passive income owning rental property here in New Jersey. We could help you find the property, help renovate it, help manage it, and even help you sell it and buy something bigger and better one day. If you want to build wealth, get some passive income, and have more financial freedom than ever before, contact us today.
Okay, so you did 12 in a year. So at what point did you finally, because like, have you done any flips or you're just like buy and hold really?
No, I've done flips.
Okay.
So that first year was wholesaling. The second year was wholesaling and flips. We got burnt on like our first 3 flips. We wanted to jump out the gate doing stuff in Springfield, Summit, new construction, expansion.
Yeah.
And the contractors projects took on a life of its own.
Retail prices. And
the prices, I don't think was the issue. It was the timeline, the hard money, the interest, holding all of that killed us. Yeah. So I don't think we made money on any of the first 3 deals. So it's funny, we were doing wholesaling all over. So we did wholesaling in Summit, we did wholesaling in, Bloomfield, Union County, like all over. And I didn't have to talk to that many people. My first year, reality, I got a lot of stuff off auction. Some stuff came through MLS, and I probably did that one mailer might have been my only mailer where I dealt directly with a seller.
So let's talk about the auction for a minute, because I've been to one auction just to watch.
This wasn't a live auction.
Oh, it was like online?
Online.
Oh,
auction.
wow.
Yep.
But still, like, have you bought anything from like auctions or no? Just live?
Yeah, I did those.
Yeah. So if you don't mind, like, let's actually, oh my God, I forgot you do tax liens too.
Yes, I do tax liens.
Yep. Right, guys, I have to fit in all these questions because like Sam's like a wealth of knowledge, and you're kind of like me. Like you kind of like, I mean, I'm active on social media, but I don't go thumping my chest. Like,
right.
Look at me. So you keep like a low profile. But so let's talk about buying at the auctions a little bit, because people ask me this question all the time. Like, Pete, I want to buy a foreclosure.
Right.
Can you help me? So you were buying these at the auction, like it's basically sight unseen. You have to look up title beforehand to see if it's clear title, or pay somebody to do it. You got to bring cashier's checks, right, for like a deposit. And
these are the live auctions you're talking about.
Yes. And then you have like, I think maybe, I don't know, 2 to 4 weeks to bring the rest of the money, something like that.
Yes. Those are the rules, but you can stretch a lot of that.
Can you?
Yeah. So, go ahead.
Well, yeah. So I was going to say, like, I think it's tough. At least for me, I've felt it's tough to win at auctions because like emotion comes into play, and people
now.
I think even 5 years ago, 10 years ago, like people like overpay, and then like it's challenging. So maybe you could just walk me through, or walk the audience through quickly, like an auction, like A to Z, like whatever property you bought from an auction. Did you flip it? Did you keep it? Like how'd that work?
Gotcha. So back then, actually, I just bought one at auction, but it was more of a property I was saving for, helping my best friend save his parents' house. So that was the last time I did an auction, last February, and I did overpay, right? But that was for sentimental reasons. Prior to that, Lenny, which goes to our group, he was killing at auctions. So it wasn't so much overbidding back then. Yes, people overbid, but really the process is you come in there with 20% of what you're willing to pay across all the board as a cashier's check. Within 7 days of your bid, if you win, you can assign it. So within that, you can change the name on the LLC. You can assign it to another. So you can kind of wholesale in the midst of it. I never really did an auction where I ran title prior.
No kidding.
It's good to do, but a lot of times you're buying in bulk. I think a lot of times you can also cancel the auction. There may be some repercussions. You may lose your deposit. You may not be able to bid. But doing title, unless you're doing in bulk, kind of doesn't really make sense.
Well, it's tough because like I tried doing it at like 1 or 2 auctions, and the day the auction like adjourned.
Yeah,
canceled.
Yep.
And then you're like, oh, great, I just gave the title company $300.
Right. So the only time I really went to auction is when I had one specific. I didn't just go to go. I had a specific 1 or 2 properties that I was identifying. So anyway, you put your deposit down. Whoever's the highest bidder wins. They start off at $100, past the upset amount. Typically, prior to the auction.
The upset amount, for people who don't know, what is that?
So typically the upset amount is sometimes the amount that the mortgage company is owed or the minimum amount that they want to see collected at the auction in order for the property to go to sale.
Right. So the bank will be like $306,250. Like, that's a weird bid.
Yeah.
And like, that's the upset amount.
Yeah.
Okay.
And most of that is sometimes they might be owed a lot more, but they deal with the auctioneers and the sheriff on finding out, I guess, what market value is on that property.
Yeah. And then correct me if I'm wrong. If no one bids past that, then the bank basically
gets it back for $100.
And then they'll put it on the market as like an REO or something like that. Yeah.
So that's where those online auctions came into play for me. But after that, if you win the bid, you typically, they say you have X amount of weeks to close, but mostly what I did is, it's not that you have X amount of weeks to close. You have a certain amount of time to close, or you start paying interest or accruing interest on that. So like the 4 families that I bought or the properties that I bought, I would use that time. At the time, maybe 4 or 5% interest now. I think it's higher then. It's higher now. But before, I would find a buyer or line up my funding, do whatever I need to do, and maybe take 2-3 months before I actually even bring the funds to the sheriff.
So by the time you brought the funds to the sheriff, you already had an end user pretty much.
End user, or I was buying or had a private lender. So,
because a follow-up question to that, that I'm sure people are thinking is like, it sounds like capital intensive. So like, did the capital come from like you and your partners just wholesaling deals, like to raise cash to then buy these at the auction, or was it like?
No, I had a private lender that would, technically I had lines of credit that I was using for the auction as a deposit. Once I won the auction, then I go find the money for the closing and run title, do all of that and make sure it's good to go. Whether it was a property I was going to buy to fix and flip, assign, or hold.
So how long after you started wholesaling did you buy at the auction?
So I think my first wholesale would have been 2014, 2015. I think my first auction property was in either 2015 and 2016.
A year or two after you started, you started going to the courthouse. Yeah. That takes some
guts. That's
a PG way of saying what I was thinking. That takes guts.
Yeah. But before I felt comfortable, you got to remember, I kind of was doing it behind a computer or on the phone when I was bidding on the online auction. So I kind of got a gist of the temperature. I don't get to see who's bidding. I can grill them and tell them. Sometimes at the auction, I'll give somebody a look, or I'll circle the area, get familiar with some of the people if it's an auction I go to, and I'll let them know, hey, chill out. Don't bid on this, right? Or I have somebody.
So I've got a great story for you, real quick. So this was a story. This did not happen to me. This happened to a mentor of mine. He's a great guy. He used to buy at the foreclosures all the time. So he goes to the auction and he's like nervous because he really wants this one house. And he talks to like the guy who, what you're saying, where, he goes to the guy, he's like, look, I really want this house. Can you please not bid on it? Like I'm going to go up to 170. I'm not going to go any higher. Like, please don't bid on it. He's like, young man, I got you. No problem. Like, I'm not going to bid on it. So the auction starts, 150. 155, 160, and then my mentor goes 170, 170 going once, 170 going twice. This little woman in the front of him raises 175, and everyone looks down, and he realizes the woman heard him talking to the guy the entire time. She bought the house and then flipped it like 12 months later for like 4 something.
What?
Yeah, so if he's listening to this podcast, he's going to know exactly what I'm talking about. So,
that's wild.
Yeah, man. I've never done auctions. I think they're pretty cool. So I guess that's how between wholesaling and auctions, is that how you kind of have acquired your portfolio?
No, actually, my portfolio, I think one property came from auction. Everything else, ironically, came through short sales. Purchasing directly from realtors.
So were those on the market or off market? Maybe a mix.
They all were on market.
On market.
So John would always refer to me as the backup king.
Yeah, I remember. Yeah.
So, and at the time, it's funny, when I was wholesaling, I was also doing Uber. My first 4 family that I bought, other than negotiating the short sale on a property that I was associated with. The first one that I bought that was completely mine came about was me circling the MLS and going to do an Uber ride and picking up a tenant from the house and listening to her talk about the landlord, whatever the case may be. And I'm like, I just saw this address. And she said, yeah, they're trying to sell it. Found the realtor, spoke to the realtor, and the realtor was saying something about, I'll keep you in mind. There's a buyer. And then like a week or two later, the deal died and
you were the backup offer.
I was the backup offer. And the funny thing about it is I was trying to wholesale that. And I was trying to wholesale that to John, I think. No, I was trying to wholesale that to another investor. And I think John was the one that convinced me, why don't you keep it as a rental?
Was that the one that was like 70 grand? Yeah. So I remember Sam posting online somewhere. That was a 4-family?
4-family, yeah.
Yeah. So this guy bought a 4-family for like 70 grand in Irvington.
Yeah. I think it was like 80. I think it ended up being like 87 total. I think it was like 80. Yeah.
Okay. 87,000, which is like the price of a luxury car today. Dude bought a 4-family. And I remember you buying that and I'm like, wow, yeah, that's a good deal. So today, that 4-family in Irvington, my guess, without knowing bedroom count or anything, is probably between like 600,000 and 800,000.
We're talking about distressed or fixed
I'm
up?
talking like, with market rent. And
yeah.
If you like put it on the MLS.
Yep.
Yeah, that's awesome.
Yeah.
So you own mostly, I think you said almost all 4-family, and then you have 1-6 unit. So why 4-family? Why not 1s, 2s, or 3s? And conversely, why not more like 5 and up?
So ironically, I did I spoke at NJRC when I did this. So initially I was going to buy my first 2-family from John. The deal didn't go through. I couldn't get mortgage at the time, which was a blessing in disguise. But my partner, he went the route of getting 2 families. Elizabeth was his area, I think 1, 2, 3. So while we was getting wholesales, we were taking our profits buying rentals. And I immediately saw and immediately thought like, well, if one tenant goes, I'm at a 50% vacancy. Yep. So from that point on, when I lost that deal, John, I'm like, okay, what's the best way for me to have the most amount of units, the least amount of risk on the vacancy, but at the same time be able to be in both mortgage markets, whether it's commercial or it's residential. And the max tops out at 4.
Right.
So under that residential threshold, I said the 4 is my sweet spot. So I just started constantly going after 4s. And I said, my criteria is if I can be able to live comfortably off of 2 units or 1 to 2 units being vacant and the other 2 takes care of itself, then it's all gravy. So I just stuck with that. And why not the 5 and 6? No particular reason. Initially I wanted to get enough 4s to kind of use the 4s gross income or net income to be my base salary. Was always juggling because initially when I was buying my personal name. So I wasn't in the space where I was jumping into commercial lending and stuff like that. And then once I graduated from the 4s or had enough 4s, I started seeking the multi, but it didn't come across my desk like much of them. I was looking for them, but they weren't ready available. The price that I was looking for wasn't. And this one I just so happened to get from the city, not because I wanted to, but because it was next door to the one that I bought. So that was like a 5-6 year process of me even acquiring it.
So I've found that I would say 2s, 3s, and 4s are definitely the sweet spot. I mean, anytime I list a 4-family as a realtor and it's a smoking piece of hot garbage, it goes under contract because people love 4-families, right? Because there's not many of them,
right?
And to build them is even harder.
Yeah, especially new construction. Yeah,
right. So, well, yeah, because actually 3 units and up, you have to fire sprinkler.
Right, sprinkler.
Right,
exactly.
so you just got handed a $40,000 bill.
Yep.
Just to add another unit.
I had a vacant lot where my goal was to do a 4-unit, and one of the reasons why I kind of I wish I didn't because that was during the pandemic. But those 4 units now are going close to $1 million in Irvington.
I believe that.
So, but I was at the time during the pandemic, 4s I think were valued the max at like 400 or 500. So when the guy was telling me about the sprinkler system, I was like, nah,
it's not just a sprinkler system too. It's like ADA compliant. They have to be, and like there's well, I guess, and then in some area, like some towns, I've seen like new construction 4 families. They make one of the units. You have to make it affordable. It's like there's there's lots of strings attached with that. So I think 4 is brilliant. And then also, I kind of agree with you because I come across so many people who are like, "Oh, Pete, do you have any multifamily?" Which I don't. I'm not a commercial broker.
Yeah.
Like I come across it from time to time, but like the people I see who buy like the 5, 10, 15, the seller's not stupid.
Right.
Like to own something like that, you have to have some money. And usually if you have money, you have a brain, or at least half of a brain, right? Unless you inherited it in your trust fund baby.
Yeah.
Right? So like what always happens, like when they contact us for, because we do property management as well. So they'll contact us, "Hey, I've got this 10 unit in XYZ city. Rents are really low. Can you manage it?" I'm like, "Okay, wait, how are you going to get the tenants out?" "Oh, well, when their lease expires." I'm like, "That's not going to work." Like, "Are you going to pay the tenants to leave?" "No." "Okay, then how are you going to increase the rents?" I don't know. It's like we manage these properties for these people, and their rent's like $800, $900, and the tenant's not stupid either. Like they've been living there for 15 years, paying.
They don't want to go anywhere.
Way under market rent. No, they don't want to go anywhere.
Right.
So like you get stuck. So I think the way to like velocity of money and to like increase your net worth and cash flow is just 2, 3s, and 4s. Like find them, rehab them, refinance them, pull the money out, do it over and over and over again, which kind of seems like that's what you've built with your portfolio. So you basically have, it sounds like maybe 6 or 7 4 families, then like a 5 unit, something like that, and all in Irvington.
One is in Newark. One's a 4 family in Newark. Yeah.
Okay. Interesting. So let's chat about the Irvington market a little bit, if you don't mind.
Okay.
I know you don't want to give away all your trade secrets here. You know what I've learned, dude? Nobody's going to take your advice anyway. Like, I'm not saying
I learned that too.
Bro, I give people like gold.
And they might even do the opposite.
Yeah. And they're like, I'm like, so that's why like now I talk freely like on podcasts, social media, whatever. And like, this guy's just, this guy Pete's a wacko. It's like, okay.
Sometimes you get to a point where you think of like, you could be spending your time doing something more productive if somebody's not going to use the information. Sometimes I think like that too.
Dude, I started charging them. Like people who really want to know, like come sit with me for an hour. I'll charge you a fee, and I promise you, I will make you a lot of money if you just trust me.
Right.
So I grew up in Union. It's next to Irvington, right? We would beat the brakes off Irvington in football. I don't know the first thing about Irvington real estate though. Okay. The only thing I remember about Irvington is when, oh my God, actually there's 2 things. And I want to see if you remember this. So when we used to play Irvington in football, this was like in the early 2000s. The St. Louis Rams were hot. Kurt Warner, Marshall Faulk, right? Isaac Bruce. And so they used to, do you remember what they used to call the Rams?
Greatest show on turf? The
greatest show on turf.
Yeah.
When we would play Irvington, this was before they had field turf.
Yeah.
So their stadium was like dirt.
Dirt. Yeah.
And do you remember what their announcer used to call them? Because I do.
That was my coach. I remember what he used to call them.
He used to call them the greatest show on dirt.
That's pretty true.
They had like this explosive offense. So anyway, that always stuck with me. So that's like the only thing I really know about Irvington.
R.I.P. Coach Still. Yeah.
So if I want to invest in Irvington, like give me some pointers as a newbie.
Investing in Irvington now. So what I would say as an investor, it's tough. I think the best way to do it is to go grassroots, like how I did, because now.
Well, you grew up there.
I grew up there.
So like the nooks and crannies.
Right.
Okay.
But at the time, I didn't know anything about like, townships and all that other stuff. That's one of the other reasons why everything is so close in proximity. I built a relationship there with the township, but all that wasn't available other than me growing up there. I didn't know people in the construction office, building office, stuff like that.
That's true.
And just by me being there all the time is how that grew. But, like going into any other market, you have to learn it. But I would say grassroots because everything else is competition. They're starting to unload properties and put out auction lists, but those are bids.
Now, are those like vacant properties or fire damaged or?
Combination.
Or properties like the city somehow bought?
Township owned properties that they foreclosed on that they now own that I've been fighting with them for years to unload. But now they're seeing a lot of interest and a lot of the numbers are inflating. So they've been holding on to a lot of these properties. Properties also that also were assigned to other developers that didn't perform. So to bring in revenues, they're auctioning them off. You got to put bids in. And I'm seeing certain people get awarded, decent amount of properties, but I think that'll be the best and probably cheapest way to get properties. But dealing with government and municipalities, everything is slow. So I wouldn't never suggest somebody just starting off to put all their eggs in that basket. Outside of that, the best way to do it, I would say, is either the auctions or, going direct to seller, grassroots marketing campaigns, things of that nature.
I'd like to imagine that Irvington's got a ton of multifamily.
Ton.
Yeah.
Yes.
And this, I always go back to this when people ask me markets to invest in. I'm like, well, really, you want to look at towns or small cities that have tons of multifamily. Because those areas were designed for renters.
Right.
My first podcast episode actually was explaining why single family homes are not rentals. And I believe that because those homes are built for a family to move into.
Family, yep.
2 families built for 2 families. 2 families, right? Or 4 families built for 4 families. So it's meant for multiple people to live there. So when I drive through Irvington, on the Parkway or whatever, you could just see, or whatever, you pull something up on Google Maps, you could see multiple doors. So are there certain neighborhoods that are better than others that are give me proximity? Is it better to own near downtown or a train line or?
So I would say, since we don't have there's no train, I would say Westwood is the most desirable.
That's a neighborhood.
Yeah.
Okay.
The Westwood section of Irvington is comprised of combination of a lot of residentials, but also you have your multifamilies. It's in the borderline, covering Hillside, Union, Maplewood, that type of the area. And, the neighborhoods, they have designated residential neighborhoods in that area. So most people, when they're coming to buy or when they're looking at Irvington, that's usually desirable.
Got it.
Most the areas on the numbered blocks are the areas that need more work or need more investment or development done that they're seeking developers do. So to be honest, if you were coming in and you were trying to flip or see appreciation and you were willing to take the risk, I would say, no, I say that's the safest.
Oh, okay.
But if you want to make money or find deals cheap or opportunities, I would say that investors are targeting those areas or building ground up construction. Those areas I've seen comps at $950 to $1 million.
Really?
Yes, but
in the rougher areas.
In the rougher areas.
$950 to $1 million for what?
For 4 families, new construction.
Well, I can believe that. Yeah.
So a lot of development is now being targeted in those areas, even multi-apartment complexes.
Well, it's funny. You know what I learned? Because, I sell a lot of 2, 3, and 4 families, right?
Yeah.
And a lot of them are run down. And I've learned to shut my mouth because you don't know where somebody came from, man. So you walk into a house and you think in your head, this is a piece of
right.
Compared to what, though? Compared to where I grew up?
Yeah.
Or compared to where I live now? And then somebody who's living there who immigrated from who the hell knows where and was living in
huts.
Literally a mud hut.
Yeah.
That's a great house for them.
Yeah.
So that's why people always turn their nose up that neighborhood's never going to change. That town's never. It's well, you don't know that.
Yeah. You'd be surprised. Even the stuff that I see now, a lot of the foreigners with the type of construction and work that they're doing, you would sit there and say, they're overspending. Because obviously, to me, I feel like sometimes you get penalized for beautifying some of these properties. But there's such amazing work being done, and it just leads others to follow. I'm
a big believer in that.
Years ago, it was you probably wouldn't have thought twice. I remember back in 2015, 2016, all the developers or investors, everything was, we don't want to flip or buy properties in Irvington. And now, in comparison to all the townships where it's hard for them to find deals or the money that they're spending, everybody wants to flood to Irvington, and they're looking for opportunity.
So, is there any are there any up and coming projects in Irvington, or approvals to build something, or how Netflix is in Monmouth County, like New Brunswick has a $700 million helix going on downtown. stuff like that?
Not that I've heard. I know there's projects that that's been closed down that I don't know if they're selling it to a direct investor or if the state is coming in and redeveloping that. I know that's something that is the next big development. I know another second phase of the hospital site that I think was approved for, 300 some odd units. They just built their second phase.
300 units. Wow, that's a big boy.
Adina Behu, she's the owner of IHOP, big time developer. I know
I know. You've done something with her, like something on social media. I know that name somehow.
Did I do? She probably was when I probably took pictures and stuff like that. She's a good friend and mentor of mine. She was a big developer, and I think they did their second phase last year. They maybe have one more phase of developing on that site.
That's incredible.
Yeah. And there's other developers doing other big, apartment complex sites in Irvington. And some of those areas that I talked about, I think 21st Street is called the 21st Street project that they're building. So there's some upcoming thing. I know the city's been waiting for a lot of those to come to fruition.
So give me some of the pros and cons of investing in Irvington.
Pros, I would say competition or barrier to entry as far as costs. In acquiring in comparison to
Other
outside
towns.
neighborhoods is always great. Con, taxes.
Because it's Essex County.
Yeah, Essex County. But obviously, in comparison to the services, I hear a lot of people complain it's not worth it. I think, I talk about a lot of times when you do the development and renovations, you have to worry about, the added assessments or the increases, especially in this market where I don't think a lot of towns, even though they have the ability to reassess your taxes when you do development, a lot of towns that have, I think, thriving businesses or thriving business district and have revenues from a lot of sources don't really press on the residents or so much in tax revenue.
They press on the developer.
Yeah. But so in that sense, the burden, a lot of Irvington's revenue comes from the taxpayer. So.
Really? Not from the state? There's probably, whatever.
No, in sense that the revenue, they don't have a lot of businesses that Elizabeth and Newark.
Right.
So that's why it's felt a lot more different and chasing those tax dollars.
Interesting.
And that's a big component.
Well, that's why I go back to if they could attract, like a large project, right?
Right.
It's this is completely different markets, but out in West Jersey, it's a lot of pharmaceuticals.
Yes.
That's why, certain.
Basically like an anchor.
Bingo. Yeah. Because then those guys pay the taxes, not the residents.
Right. I know they tried doing that with, there's a big Valley Fair mall that they've been trying to find an anchor store to come into town.
Let me ask you another question about Irvington, because the stigma is not a good area, right? Like crime.
Yeah.
So, and dude, I work in New Brunswick and there was a guy right down the street from my office. He was doing sit-ups on the sidewalk. He was ODing basically, right? So are there zombies walking around, high crime areas?
No, I wouldn't say that. I would say certain borderline, certain areas closer to Newark, you'll find probably, people on drugs and things like that. But overall, the crime rate has gone down. For me, I don't see or feel what a lot of people see on news media. To me, it's a lot of other towns.
Well, you know what it is too. When you're in the same area over and over and over and over, you get desensitized.
Right.
Period. Because I remember, because I lived in New Brunswick as a college student going to Rutgers. Right. And the houses are not the most attractive.
Right.
I'm being polite. And then I came back 5 years later. I'm oh my God, this place. Right. And then there were certain areas in New Brunswick. I was nope, we don't manage it over there. Nope, I won't even go in that neighborhood.
Yeah.
Now I go everywhere, because you get used to it after a while. And so people ask me the same questions. Yeah. That's not a New Brunswick or an Irvington thing.
Yeah.
That's a Camden thing, a Patterson thing, a Perth Amboy, Elizabeth.
Right.
This crime obviously happens.
Yes.
Usually at night, usually, drug related. It's it's not a third world country, I'd like to imagine, where you're walking down the street and they just shoot you, right? So that's why I'm just bringing it up, because people listening, they think of those cities and I don't want to invest in there. It's too dangerous.
Yeah, I think a lot of that is exaggerated. Obviously, there's certain blocks that I wouldn't invest in. just for risk purposes, but in comparison to certain neighborhoods or certain, states that you hear about large crimes, even in New Jersey, Irvington is not one of them. I think that kind of has gotten better over the years, definitely.
I mean, I'd imagine it's gotten better and I really don't know, but like I'd imagine it has if the housing is appreciating that much. That's what blows my mind. Like I'm like, the stuff you're telling me, I'm like, what?
Right.
Right. So that's.
But I'm not going to say like my projects have been, broken into. I've gotten stuff.
Oh, I have no doubt.
But that I'm pretty sure that happens in, projects in certain areas.
Yeah. I mean, I don't think that's happening in like very nice towns, but
you keep your door unlocked and have like all the equipment material.
Yeah. But in towns where there's crime, like that's going to happen.
Right.
That's kind of, you kind of have to bake that into your underwriting a little bit.
Yeah.
That's why like we, with like our job sites, like I tell them like lock all the windows and doors. We actually have like I got this from one of John's latest seminars, like about construction. I went out, I think they're behind me, and I printed out like 2 foot tall laminated job site rules. And one of them is like lock all windows and doors before you leave, please.
Yeah. You got to hope that they read it though.
Well, I did it in English and Spanish, so, but that doesn't help me with my framers who are Portuguese, so yeah. I'm trying. All right. This has all been really good stuff. I feel like we could really talk about a lot of different stuff for a while here. I do want to try to wrap it up. So you own a bunch of 5 families, like very successful. So, and I will say, I've mentioned this to a couple people, and I have to find out the name of the book because I keep bringing it up on my podcast. But there's one thing from this book that stuck out to me. It basically said like, you have to find your goalpost, because if you don't, it's never enough.
Right.
Right. Because then you're like, well, I have 20 units and Sam has 30. I really need 30.
Yeah.
And then Sam's going, I have 30, but Joe Schmo has 60. I really need 60. And then you get to, and
in comparison.
It's like, what's your, like at this stage in your investing career, because you're not a newbie, like what are your plans for the future?
To retire.
You're already retired.
I don't feel that way. Like I literally thought I was going to take this first quarter off, and I was managing projects, rentals.
But do you enjoy it? Is it fun or is it work?
It feels like work at this point.
Okay.
So I don't know, but I always say, I said this years ago on John's podcast, because I remember John years ago would constantly say he's done. He'll jump back in, he's done. So it's like, who knows? Maybe I'll take a break for like a few months and then I'll get the itch. Like I'm bored. I need another deal. So I'm not going to say I'm fully retired, but the grind and the hustle and bustle and the yelling and the, frustration with the contractors, like I'm over there at this point.
I'm trying to get there myself, honestly. Like, that's what I was telling you earlier before the show. Like I'm just interested in having like that. I personally own like really nice stuff.
Yeah. No
problems. And just petting. I'm not trying to squeeze every, nickel and dime
out
of people. Like I just want a nice product. At this stage in my career, like I want to help people.
Yeah.
Like, that's why I have this podcast. Like I don't know squat about the Irvington market.
Right.
But somebody listening to this is learning about it. It's like, oh man, maybe that's an opportunity I've missed. So I could level with you on that.
I think one of the things I want to do is I would like to do something, a development of some sort.
That's what I'm getting into now.
Yeah.
But let me, I know I'm cutting you off. Being a developer is fun because you could create it and you build it, but you feel so poor during it. I feel so broke, dude.
I know.
Bro, there's so much that you have to spend money on. Like you get feed to death.
Yeah.
And then they put you through hell getting the approval. And then when you go before the board, like they don't know who you are. They, and then some people, talk like, this guy, Sam, who's he paying off? Who does he know? Dude, that happened to me. And I cracked a smile and I looked up and the one guy saw me smiling. And I'm like, oh my God, this guy thinks I'm a jerk. And the dude voted no on my project.
Because he saw you smiling?
Yeah, because like I'm laughing at the woman, like accusing me of like bribing people.
Yeah.
I'm like, lady, do you have any idea? Dude,
like most people that don't in those positions.
Yeah, it's like development's great. Very, very capital intensive.
But that's one of the things, like, so my faith, like I'm very neutral when it comes to politics, voting, and all that other stuff. So I've always heard, I think I could be different. I'm not going to do this, but it's like I would always see that when you're doing development, you kind of have to know who the players are. And I'm like, what does that mean?
Yep. No,
you know,
100%.
and it's like, I see now why certain people getting certain projects, getting a certain amount of units approval. And I'm like, I've always been like, listen, if I go that route, give it to me because it makes sense for the city or I, qualify for it. I don't want to be owing no favors. No.
I mean, I'm sure that happens. I haven't come across that at all. I do think it helps if you're going to get into development, like to do it in Irvington because they know you.
Yeah.
And like that goes a long way because like I've noticed towns, when like they don't know who you are, like you're an outsider, you're just trying to make a quick buck and get in and out, or do you like actually care about the community? So look, it's been awesome having you on. I feel like we could talk like forever. Real quick, before I let you go, anybody who's looking to reach out to you or get in touch with you, what's the best way?
Instagram at International Sam C. Facebook, Sam Cherilus.
CHERILUS. ILUS?
Yeah.
All right, man. Well, I appreciate having you. And guys, thanks again for listening, and we'll see you on the next one.
Thanks for having me, brother.
Thanks for listening to the New Jersey Real Estate Investor Podcast. Make sure to subscribe so you don't miss the next episode. Until next time.